Hello and welcome. You're watching BTTV or Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we talk about the buzzing stocks, also the stocks in news, and what should be your strategy on those. And joining us to help us with that today is Mr. Kranthi Bathini from Wealthman Securities. He's the Director of Equity Research there. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, the talking point has been all this day about the new age tech stocks that got listed last year, but most of them are going to be seeing the pre-IPO investors lock-in period end in November or the early first week of November as well. And we have been seeing these stocks continuously in pressure all this year throughout. And most of them are now seen slipping even below their pre-IPO or their IPO level, prices as well, or the issue prices as well. So that's where the concern is emerging. First up, help us really understand how are you looking at this continuous fall that we are seeing. Nykaa, for example, it slipped below the issue price, and now it's in a three-digit stock as well, down about 62% from its all-time high levels as well. Also, when you talk about PB Fintech, Delivery, all of them are down 50, 70 odd percent as well. So it's the sharp fall. How do you see it, and what should be investor strategy as we look at that looming lock-in period ending?
Sakshi, to add to your list, there are Zomato, there are PayTMs of the world to your list. So one thing, Sakshi, the retail investor need to keep in mind is always highly popular, highly priced stocks never sustain its valuations. That's what investors need to learn from this, all the fiasco in these stocks from past 1 year after the listing. So when we say any company is coming with the IPO with a 100 PE and there is a lot of buzz around this stock, investors need to take a stance whether I can happy with the listing gains or can I build up a long-term position in these stocks. These valuations can be sustainable over a period of time or not. These are the precautions at least investors need to consider on their radar while taking any serious positions in these stocks.
That's very true.
If I have to compare and go back to the dot-com bubble kind of thing, I can say this is a kind of a platform companies bubble that bursted in India, what we can say. But is these companies are going out of the fate? No. Okay, they have a strong business models, but the way they came up with the IPOs and the proposed the prices and sold their equity at a astronomical valuations. Okay, valuations are quite expensive. So this is one reason. So going ahead, how these business models are going to sustain? Of course, there is a lot of disruption has been happening in these companies. These companies are doing a lot of disruption. How the way our life functions, and now we see the Zomatos of the world, the Jeptos of the world, where the valuations have been going up, and they are doing a beautiful job in the where they are functioning and facilitating the end consumer. But coming to making money, okay, whether they are making serious money by providing this disruption without burning any cash, are they earning money? This is the bigger thing investors need to keep in mind while making any investments in these stocks. So what are the list of stocks we discussed? They are prominent in their place, but one thing investors need to understand is how much these money, how much margins they are making, how the revenues are going up without burning any cash is the question one need to ask themselves before taking any serious investment decisions in these business models.
Sure. But do you anticipate more decline in these stocks as we move into November, closer to the dates of the pre-IPO investors lock-in period ending? Say for Nykaa, it will be around 8th, 9th November. For the others also, it will be early November only. Do you anticipate more fall? And for all those investors who've been holding these stocks from the IPO allotment period, it's been a painful journey so far. They've been holding on to the stocks, most of them thinking that perhaps the prices will come back to those highs that they had seen post the listing as well for many of these stocks. For them, what would be the advice that you would give?
Sakshi, I'm not here to say whether these institutional investors, they're going to dump the stocks in the market when the lock-in period ends or not. We need to wait and watch because every institutional investors have a strategy to execute their sales. because
Sure.
these are all strategic investors, and some cases they are the financial investors or a
Sure.
period. So, of course, still at these prices, also some investors are sitting at a handful of profit. The people who invested in these companies previously or before the initial listings, still okay, they are sitting at a handful of profit. They have not lost any money. Now, the going ahead, how these business models are going to be sustained, because uh, the lock-in period thing is one of the event how it's going to create extra supply on the counter. We need to wait and watch. Probably they might have some kind of negotiated deals if they are some institutions are really interested in these kind of business models. We need to see. One thing as a retail investors, what we need to know whether this is the right time to enter into these stocks, or if I am an existing investor, what should I do? This is the $1 million question every retail investors have, because these are all very
Absolutely.
valuations companies. So post listing of big, great, successful companies like Infosys, we cannot compare these companies with the Infosys. But if I have to draw a closer scenario between post listing, the Infosys also had its rough patch. The stock also struggled for some period of time. But after emerging their earnings and increasing their formidable position in the space they operate, they turn out to be the wealth creators over a period of time. Whether these
Okay.
companies are going to repeat those kind of investment models, great investment stories, is the bigger questions investors have.
Okay.
Investors with high risk appetite, definitely they can consider wait and watch. No need to buy and in a hurry. They need to go, and if they are in a hurry, they get buried. Okay, that's why the reason is they need to be very extra cautious. Okay, while making the investment decisions, and probably in a staggered manner. Okay, people can look into these stocks to make any kind of since the valuations coming to attractive levels, they can make the decision. And one thing first and foremost is they need to consider how the quarterly earnings are panning out
Yeah.
for these companies.
Okay, understood that. Well, thank you so much, Mr. Bathini, for being with us on this show and discussing as to what should be the right strategy investors must follow in these new age stocks that have been facing a vertical fall from a long time this whole year and are now trading 50, 60, and even 70% down from their all-time high levels. Thank you so much for being with us.
Thank you, Sakshi.